Good Tuesday morning, everyone. My name is Bill. I am one of your hosts for this video podcast series, Real Living in Chicagoland. And as we're kind of starting today with a little bit of stormy weather, um, it is what it is this time of the year. Hey, what is it? April showers brings May flowers. And because of that, this month of May, by the way, for all of you watching who are mothers, a premature early happy Mother's Day to you and yours. So with all of that said, let me make sure my co-host is ready to join us. And we're going to start today's live stream to talk about some usual stuff about real estate, but we're going to pivot a little bit to talk about something that I think many of you may be scratching your head and asking yourself this very same question. So let me bring my co-host Stewart into the conversation. And Stewart is mobile today. Hey, Stewart.
Hey, Bill, how are you?
I'm doing well. I'm doing well. Like I said, to everyone who's watching us today, an early happy Mother's Day to you and yours. Hopefully you've got some big plans for Saturday and or Sunday, right?
Yeah, for sure. As always, we got to take care of our mothers because they took care of us when we were young.
Right on, right on. And also in most households, especially in the business that we're in, Stuart, it's the mothers, it's the female spouses who is the house boss. They're the ones kind of driving the bus with what's going to happen, right?
For sure.
So let's lead off with you're starting us on dropping your information about like current trends, a market update as you see it in the greater Chicagoland.
Well, first and foremost, the really great part is people are finally starting to list their homes.
Yeah.
There's a good amount of homes hitting the market quickly. Unfortunately, or fortunately, there's still a lot of buyers that are buying them up quickly.
I know.
There's not enough inventory, but at least it's hitting the market, and we're off to the races. So houses are going up, selling immediately, and that's what we need.
Yeah, I completely agree with you. Local and close to me, I see the inventory log jam breaking open a little bit. I see more listings coming onto the market, but just like you said, as a layperson, I see enough of my members who are selling their homes, and then it seems like within 12 hours, sometimes within easily 24 hours, that property is already under contract. Are you still seeing the challenge of multiple offers for buyers? Maybe, of course, not a challenge for sellers, right? They want that.
Right. Yeah, definitely. That's what sellers want. Yes, it is a challenge for buyers. I'm seeing agents watching the private market quite a bit more,
Really?
jumping on properties the minute they're on the private network, which helps limit the craziness and the multiples of offers.
Okay.
To give you an example, I listed a property in Huntley on Sunday. Monday morning, I had a request for a showing. Monday afternoon, I had a cash offer in hand, over asking.
Wow. Cash over
So,
ask. Oh my gosh.
yeah,
That is crazy. And as I said to just someone the other day, the market that we're in right now as real estate professionals, and also the market that we both see as consumers and lay people, it's defying gravity, isn't it?
yeah, yeah, for sure. It is unbelievable how quickly and how everything is moving so fast. People are motivated. They're trying to avoid the multiple offers. They're trying to avoid the battle. And one of the ways is to really go after stuff that's on the private network. And the other way is to separate themselves, come in with a really, really strong offer And as you know, Bill, the best way to do that is to work with a top-notch loan officer that's going to make sure they can present you in the best light possible with the best loan scenario possible.
True, true. And along that way, it's also maybe helping that buyer, you and I, helping them understand like what contingencies can they think about and or remove as part of making their offer a lot stronger, correct?
100%. Yep. The
Real
less
quick.
difficult your loan is, the easier you're going to get the property.
That's true. The less moving parts that can fall apart, the better, right?
Absolutely.
What is your advice to your clients who may already own a property and they may be in a great spot where maybe they don't need to sell that property to buy this next one with you? Are you advising them of, hey, all things being equal, if you want to look stronger, if you want to get to the top of the heap, are you advising them to, of course, like remove the home sale contingency, maybe not sell the home, but think about renting it, right?
Yeah, and whatever they can do to get away with not having to put in what's called a home sale contingency. That in many, many instances, unless you're the first and only offer in, you're going to get rejected almost every single time.
Right.
So that does make it difficult. I go through the process of asking my clients, talk to your lender, see if they can do some type of bridge loan, see if they can do some type of rental, like you were saying,
Right.
anything, or if you just qualify without selling,
Right.
yeah, you want the money. And a lot of people, they focus in on, well, I've got to have 20% down, or I want to take all my proceeds and put it down on the new house, so I have to sell first. You don't necessarily have to do that. A lot of lenders can do, for lack of a better term, magic when it comes to how they put the loan together to get you into it, and then you can adjust afterwards. You could talk to your lender about, there are certain lenders that have what's called a recast. You close at 5%, and then when you get your funds, you put the extra $100,000 down. Just different things that you can do to really make a difference. And all that is communicate with your lender, communicate with them, ask them, how can you make me a stronger buyer? And your lender's going to tell you, this is how we can do it.
Yeah, spot on, spot on. I have those very same conversations with some of my buyer clients, where if they currently own a property and if they certainly have enough equity, we almost always look at all three of those scenarios. Can we approve you without doing anything with your current home, right? Can we approve you to rent it out? And whatever that rental, gross rental income is, if it's large enough, strong enough to offset whatever your remaining monthly debt expense in carrying that property is, then it becomes a wash. Or last one, just like you touched upon, if you've got enough equity, can we carve out just enough of the equity through a bridge loan, bridge financing, so that you can take care of that piece and then just write a non-contingent offer on the next home with you, Stewart? So spot on, spot on. Not everyone can have the luxury of having all three doors and all three choices available to them. But just like you said, it's so important to make sure that candidly, openly, we have that kind of conversation together.
Yep, for sure,
Yeah.
for sure. I'm
Yeah.
finding the number one breakdown with buyers losing deals is lack of communication. Lack of communication with their lender, first off, and then second with their realtor. Just
Yes.
talking about, how can you make me the strongest buyer out there?
Right, right, right. And just like in the business and the game of sports, right? Football or basketball, you got to have a playbook. You got to have a play that you're ready to execute. And if that play might not be the best one, because all of a sudden you see and you're reading what's on the floor, you've got to pivot and say, okay, now we got to shift to this different play together. Right on.
Right.
Yeah. As part of our live stream conversation today, one of my connections, one of my local friends was kind enough to also share her time with us. And so at this moment, let me make sure Marianne Holm is ready to join us in this conversation. Let me knock on her guest room door. So 1 second. All right, Marianne, I think you're ready, right? Yes, I think you are. Let's bring you into the room.
Welcome in.
All right, 1 second. There we go. We see your lovely face now.
Welcome in.
Yeah. So, Marianne, as you've heard already in our conversation, Stewart and mine, in today's episode, we're talking about how buyers can empower themselves to get to the outcome that they want, right? You and I know this together, and that is if someone's buying a home, you provide the solution to protect it from risk. Talk to us about what's going on in your business within the past, let's say, 12 months, 24 months. We've heard, I think both Stewart and I have heard a few things. We don't know whether it's reality, myth, and that is insurance is getting more expensive. We've also heard there are some carriers leaving the business or denying coverage. It sounds scary. Talk to us about that.
Well, Bill, that is correct. And good morning, Stewart. Just like you mentioned, having a playbook, for us in the industry, it's an educated consumer. Your insurance is protecting one of your largest assets, which is your home. And, to educate and understand what the contract is really about, it's not cookie cutter. And we are in this business, it's, hey, Marianne, my neighbor next door has XYZ company and, and they're only paying this and they got a new roof. And there's so many factors that go into coverages, premiums.
Yeah.
It's like I said, it's a contract. It's only good as the language it's written in. Things can be what we call endorsed, meaning we could put it in, take it out, put it in, take it out.
Mm-hmm.
Some of the things we are seeing, companies are, it's the roof. The roof is one of the bigger things. Years ago, I've been doing this a lot of years. It was water coverage. Everybody was all, we got to have well and septic in case our basement floods, and carriers would come back to us and say they must have a working sub pump and a backup. Right. Now carriers are coming back, and we deal with about 10 A+ carriers.
Okay.
And you are correct in saying that some of them are getting out of the business.
Okay.
The ones that are left standing are throwing, things at us. They don't want to write a home that has a roof older than 10 years.
Oh, wow.
So that's been challenging. And how that kind of works is it's replacement cost or ACV, which is actual cash value. Okay. Depreciates. So those are some of the things that are coming into play where, we want to make sure that the customers is covered properly. Okay. Working with you, we've been working together for a while too. Debt to income ratio. We want to make sure that, we don't come back and I say, well, Bill, your client and our client soon to be is going to have a $3,500 mortgage, and you say, or insurance. So we work with deductibles. That's something we can control. That's another stipulation some of the carriers are putting on us. Nothing less than a $2,500 deductibles.
Oh, wow. Okay.
So the days of the $1,000 deductible, I mean, yeah, I'd put a new roof on too. I'll file a claim if I get $8,000. So, some of the risks we can control. Some of it we can't.
Okay.
That all kind of goes in, your credit's done, just like in applying for a loan. Credit is taken into consideration. We use reports from LexisNexis that, your history. Do you have a lot
Okay.
of claims?
Okay.
So those are some of the things that we're seeing. And, Bill and Stewart, I think, and the bottom line is there's a rising cost to rebuild and repair.
That's true. Yeah,
So
that is simply passed on to property owners who must also insure and protect that rising cost asset, right? Yeah. Does the same hold true with the other asset that's part of most households, and that is their autos? You're seeing the same thing?
Yeah, we are seeing the same thing. We've got a couple of companies that will do what we call like a rate lock.
Okay.
And a diminishing deductible. There are some criteria. You can't move, you can't change cars. It recalculates your rate, but it's a great thing because out of the major car insurance companies, they are doing 6-month policies now per term.
Oh, for term. Okay.
Yeah.
As opposed to a 12-month policy.
Annual, correct.
Okay.
Yeah. And the term, you bundle and save. You do.
Yeah. Bundle and save, one-stop shop. Yes. Does this factor into the cost as well, which is if a property owner has like solar panels or in-home EV charging, does that make it more expensive, higher risk? Can you talk to us about that?
Some of the companies will give a discount for certain things. Burglar alarm that goes right to your local police department.
Right.
Deadbolt locks, locks. We came across someone called me the other day, a tinge, and it was something with your utilities. And we called a couple of our underwriters, and they're like, we've never really came across that. So certain discounts do apply. The solar panels, we're seeing a lot of companies door knocking.
Yeah.
In areas just like Storm Chaser, they knock on the door and say, hey, we can get you a discount. We've just put in. We haven't seen it much.
Okay.
But there are things with, like I said, the backup battery, marine battery for a sub pump. Fenced in pools, still kind of the classic with the pools and the trampoline, and it's not so much the dogs anymore. We're not allowed to ask that anymore. What breed? So.
Oh, okay. Interesting.
They have a bite history. So, yeah, it's really something that everybody has a little different combination of coverages and perks, and but overall, I mean, I used to be able to know just by looking at an application and a declaration page, which is what your coverages are.
Right.
Probably where I was going to place this person or offer them a quote.
Okay.
Now I submit it, filter it out, and I have to look at every carrier, and because they've split. Another thing is they've split deductibles for the roof and the dwelling.
Oh wow! So things are not as straightforward and as simple as they used to be for you. Yeah, that's what you're trying to tell us. So as we wrap up, audience members, what I think I'm hearing is if you own property, if you're going to buy a property where the roof is in somewhat newer condition, the choices of your insuring that property at the best dollar available is going to be in your favor, correct?
Correct. It's one of the things that for our new home buyers as well.
Yeah.
Even when we have, what's the condition? If you have the inspection report, they don't want to, the insurance companies are really buckling down on things like that. So it's challenging, but we want to do what's best for the consumer. And we want to make sure that premiums aren't, you know, it's not your premium. It's also what you're covered at.
Yeah, right on, right on. So as we wrap up, for those of you who are home buyers, and of course, in a working relationship buying with Stewart, Stewart knows this. One of the key first steps is, of course, doing that home inspection, and that will clearly tell you whether you're buying a home with everything that's newer, and therefore, when insuring that kind of property with Mary Ann, your cost of that level of protection probably is going to be a little bit more effective for you, as opposed to going the other direction. So as we wrap up today's episode of Real Living in Chicagoland, for those of you who may be thinking about selling a home and or buying a home, or you're going to do it together, right? The fun begins when, you know, you've got a couple of things that must be juggled at the same time. Feel free to scan the QR code for Stewart next to his headshot. And along the way, if you, of course, need financing for that transaction because you just cannot afford to let go of all of your cash to make it a cash purchase, hit me up. All you've got to do is scan the QR code next to my headshot. And of course, as part of bringing the dream team to protect your most important asset, we can absolutely connect you with Mary Ann Home so that you get the right coverage, you get the right level of protection, so that you have peace of mind. So that's it, everyone, for today's episode of Real Living in Chicagoland. Stewart, safe driving to your next destination. Mary Ann,
absolutely.
Thank you.
Hey, I would just you know, do a little PSA, and that would be, you know, for all those people out there that are buying, to make Bill's job easier and to make Mary Ann's job easier, right?
Sure.
When you go out with your agent, you know, ask them the question, how old is the roof?
Yeah.
Ask to look at it yourself with your agent. You can tell if a roof looks in poor condition. It's easy to tell if there's missing shingles. And maybe this is a factor that you take into consideration before you go to inspection, because otherwise you write the offer, and let's say you win it, and then you're disappointed because the roof has issues, there's missing shingles, it's old, it's at the end of its life. Now, not only are you going to have insurance concerns and an increase in policy, but then you're going to also have your own concerns, and whether or not you walk away from the deal because of a roof, or you got to ask the seller to contribute, it just becomes more of a mess. So before you go through that trouble, just take an easy look, step back, walk across the street and look at the roof. Whatever you have to do to get a visual, and also have your agent ask the other agent, how old is the roof approximately? People don't always know, but at least they have an idea.
Doing that level of preparation is so much better before you drop what is it, at least $350 or more for the inspection.
Like everything, it's gone up. It's no longer $350.
Oh my gosh. Okay.
Inspectors are now at $450 and up.
Wow, really?
Wow. Yes. Almost every inspector I've come across is now $450 and up.
Yeah.
Wow.
There you have it, Mary Ann. Everything's gotten a little bit more expensive. All right. You guys, thanks for your contribution today in this live stream conversation that's so important for all of our mutual clients. And so for all of you who are watching this and or listening to this episode on demand, yes, this is all about giving you the information that you need to empower you to get to your outcome. That's it for now. See all of you, Stewart, and perhaps Mary Ann, in the next episode, which will be 4 weeks out.
All right.
Make it a great day.
Thank you, Mary Ann. Thanks, Bill. See you guys.
Bye-bye.